All right, welcome in. This is the Cow Guy Close, and I am Scott Shellady, also known as the Cow Guy. Thank you for being with us today. You know, the markets are loving this week's ever-important inflation reads. It's leading to some to believe that maybe inflation and that big monster that it is has been slain. Now, that may be the case, and the next few months will be very telling about that. But rates look to go up at least one more time. But after that, I think it gets a little murky. The market is forecasting around a 90%, 92% chance of another hike this month. And stocks had a great first half of the year, no doubt about that. And with inflation easing as it has in these last two reports, that could add more fuel to more market rallies with the rest of the year going up. So with interest rates stopping going higher, that could be good, right? But that's my point. They're stopping from going higher. Now, famed investor Jim Grant is looking for a bond market that sells off with higher rates for longer. That's something interesting. And that bank term funding window that was opened up during that banking crisis in March and April, that's seen bigger withdrawals month over month since it opened. And that suggests that the regional banks are still a little bit on shaky ground. Now, is this a scenario where maybe I'm borrowing trouble, or are there genuine concerns going forward? I know just the guy to have this chat with. He's been right. Please welcome into the show, author of the Bullseye Beef, Adam Johnson. Adam, thanks for coming on. All right. I mean, you got to give you your due. You've been hanging in there even when things got a little dark in March and April. But now you're reaping the rewards of these higher markets. Is everything okay because we had a 33% rally in the NASDAQ in the first half of the year and interest rates look to be topping out? Or is there anything else we should be worried about? What say you? You have the floor.
Well, thanks, Scott. Bears always sound smarter than bulls because the assumption is the bears see something that the gullible bulls don't see. But honestly, I think sometimes you try too hard to see stuff that may not even be there. Look, the inflation numbers have been spectacular this week. There were 4 different readings on consumer prices, month over month, year over year, and then the core for both of those. And then 4 more for producer prices, PPI. All 8 readings were lower than expected. So this is not something we have to overthink, Scott. I mean, consumer prices are down to 3%, okay? The headline number, 3%. The Fed's goal is 2%, and they were over 9 at the high. Looking at producer prices, they were almost 12. And they're back to flat. They're up only 0.1%. So I think the inflation story is old news. I know the core is still a little higher, and that's probably why we get one more hike. But I think at this point, the Fed is probably just trying to prove a point. It actually risks going too far. The inflation story is in the rearview mirror, which is why stocks are going up. And as to your question about whether the NASDAQ is overextended, well, you know, it went down 35% last year. So being up 35% this year isn't that big a deal. We're just back at the same place. And I actually think that the Dow is the next group of stocks that are going to rise. They're only up about 4 or 5% this year, so they need to play catch up.
All right. Help me out with this. I need your help. I want you to take your Wall Street hat and turn it backwards so you've got a Main Street hat on, okay? And now your Main Street hat says, look, Adam, prices were up this time last year 9.1%, and then we've added a further 3% now, right? So as a Main Street person that doesn't really look at the markets that much and I just go do my job every day, I'm struggling with these prices, and they're still going up, but at a slower pace. Yes. What do you say to those folks? A lot of them watch this show. I am having a hard time planning my next month now, and if prices continue to rise, albeit at a slower pace, how can I be excited about that?
Well, I'll say 2 things. First of all, Wall Street doesn't necessarily do what Main Street does. And the fact that rates aren't going to go up a whole lot more, if at all, anymore is very good for Wall Street. So Wall Street is very happy with those numbers yesterday. Now, to your point on Main Street, yes, inflation is still going up. It's just going up at a lower rate. And that still bites. It still hurts because your spending power isn't what it was. But recognize that the decision to go out and buy stocks is different from the emotion that you may have when you walk into the supermarket.
Absolutely.
Those are 2 totally different things. Now, as far as the emotions of inflation are concerned. What I will say, Scott, is that as inflation comes down, our real incomes will actually start to reinflate, meaning adjusted for inflation.
Good point.
You know, if you look at nominal income, it's up, I want to say 5 or 6%. So we actually are getting higher, dollars and cents paychecks. It's just that it's not going as far because inflation took a bite out of it. The good news is if we continue to get those little cost of living adjustments, if our employers continue to give us, a little 2%, 3% raise, whatever, eventually we do catch up and that buying power is restored. But that's the not tug of war, but that's just the sort of
dichotomy
two sides of what's happening.
I gotcha. Yeah, that's good. Good answer. I'll give you a solid A- for that. All right, that's good stuff. I appreciate that. And because you've gotten us so right, we're going to have to give out how people get in touch with you, how they get to know more about you, because you've had such a great first half. Tell us where they go to look for you.
Oh, thanks, Scott. BullseyeBrief.com. I'm a growth investor. I put out a new stock pick every week, and I'm really excited about this week. It is the world's #1 pure play for outsourced logistics.
Okay.
Something that I think a lot of our viewers can appreciate. All the stuff that goes behind getting things where they need to go. So you can focus on running your business rather than managing the stuff behind your business. So
all right.
Very excited for this week's new Bullseye.
Awesome stuff. Thank you very much for coming on. Love to hear what you have to say. Adam Johnson comes to us